Hey, welcome back to Steady Money Stock Channel. My name is Anthony. Today I'm going to show you how to sell in the money covered calls for both income and price protection. That's right. When you sell in the money covered calls, you can generate income from your stock while also protecting it in case the price goes down. Okay, let's get started. Okay, for today's example, we're going to use Tesla stock. All right, Tesla is a very popular stock when it comes to trading options. And the reason is, look at all this volatility, right? When a stock is volatile like this, the implied volatility goes up and that makes the option premium swell. Right, there's two types of value in options, intrinsic value and extrinsic. Make sure you look that up and study that and learn the difference in extrinsic and intrinsic so you know what they mean, okay? But extrinsic value goes very high when there's a lot of volatility and the premiums swell and you can make a lot more money. That's why people like to do option trades on Tesla. Okay, moving on. For our example, we're gonna buy Tesla at $440, and then we're going to sell a covered call in the money covered call at $380, right? So someone might ask, well, why would I want to buy Tesla at $440 and then sell an in the money call $60 below what I paid for it? Well, someone's going to call you out at $380, you have to sell it, you're going to lose $60. Well, why would I do that? Well, I'll tell you why. Because you go over here to the options chain, you put in Tesla, go to January 9th, 31 days out, and you look at the 380 strike price. And the 380 strike price is $65. Well, if I buy it at 440 and I sell the covered call for 380, that's only a $60 difference, right? $60 in intrinsic value. That's the difference between the price of the stock right now and the strike price of this option that I'm going to sell, this covered call. Well, it's $60. That is intrinsic value. That is the dollar value, the real value of that option. Well, why am I getting $65 if I sell it? Well, because the other $5 is called extrinsic value, okay? That is the time premium that you're getting for allowing this person to hold that covered call up until January 9th, and they have the luxury of seeing what this stock does all the way up to this date. Well, for that date, they're paying you this time premium, the extrinsic value, and together, the extrinsic, the intrinsic, that comes to $65 for the total option price, okay? So let's review that one more time. You're gonna buy the stock, hypothetically, at 440, and you're gonna sell a covered call down to 380. Well, why would you do a 380 covered call? Because you wanna protect yourself in case the stock drops, right? It's a volatile stock. I'm afraid if I buy Tesla right here, it might drop below this support level, and if it does, I wanna protect myself down to 380. So I'm selling it at 380. That means whatever this price does, as long as it stays between here, I'm protected. I'm not gonna lose anything. I get to keep the $5 premium no matter what. Okay, because I bought the stock for 440, I sold the option immediately for $65, so I brought in $65, and now I wait till expiration, I get called out at 380, I keep the $5 no matter what happens. The stock can go up, it can go down, or it can stay the same. I keep this $5 premium no matter what, right? That's the beauty of covered calls, right? You're making income, and when it comes to in the money covered calls, you're making income plus getting this downside protection. All right, this is a big deal because a lot of people trade, they buy stocks like Tesla and then they sell a covered call way up here and then the stock tanks and all they get to keep is that covered call premium. Meantime, they're losing all this money on the stock, right? Well, this is a way to make the premium on the covered call without losing all this money on the stock. Now in this example, you're only protected down to 380, right? But if you want more protection, then you sell more protection. You could sell it down here to 340 if you wanted to. You could sell a covered call at 340. Now you're not going to make $5 in extrinsic value. You're probably going to make 2 or 3, but you're going to have more protection, right? So you can do whatever you want to do. Some people might even go all the way down to here and only make a little bit of extrinsic value, but they got all this downside protection. Again, once again, it depends on your skills, your goals, your lifestyle, how much time you have to put into this and what you want to get out of it. But for this example, we're doing a 380, right? And for 380, we're selling it at 440. We're getting $65. 60 of it's going into intrinsic value. 5 of it is extrinsic. That is ours to keep no matter what. And then after that expires, we decide what we're going to do next. Now let's look at the outcomes of this particular trade. Well, if I buy this right now at 440 and I sell this at 380 and I wait to January 9th, which is this date right here, only one of 3 things can happen. The stock can go higher. If it does, I will get called away at 380 and I will keep the $5 premium. I will break even on everything else and I keep the $5 premium no matter what. If the stock goes lower, right? I will not get called away, but I will keep the $5 premium no matter what, but I would then continue owning the stock. If it goes below this 380, I continue to own the stock, but I still keep the $5 no matter what, and I sell another call against it, right? And continue doing what I just did here to the best of my ability. Now, this is skill you want to develop, so you want to get out there, start practicing your covered call skills and your covered call trades, so you learn all the nuances of how they work and you get better and better at it, and you will, right? I started out my first covered call trading, it was a mess, and I stumbled through it until I figured out how everything worked. Now I polished my skills, I'm getting better and better, and what happens is I make more and more money every single month because I'm getting a better understanding of how everything works and how things move. These numbers all change minute by minute, but this is just an example to get you started, right? So now what's the third thing that could happen? Well, the price will stay between these two lines right here. Price will just go sideways. We'll say, well, what happens then? You're going to get called out at 380. You're no longer going to own the stock, but again, you get to keep the $5. So the point is, no matter what happens, you get to keep this $5 premium. That's the beauty of covered calls. That's guaranteed money, income in your pocket, yours to keep no matter what. The other outcome is, are you going to own the stock at 380, or is it going to get called away and you have to buy it again? Well, that will be determined by the market price action, okay? Very important trade. This is a video you might want to watch a couple times to make sure you understand it, right? Intrinsic and extrinsic value, you need to understand what those are. It's beyond the scope of this video to get too deep. Just go look it up. You just want to understand, this is money value of the option. This is time value of the option. That's the basic description of them, okay? And then going here from here, you want to learn, well, gee, how productive are in the money calls and how can I get better and better at selling them to protect me? Now, there's examples I'm going to show later. Now, remember, I'm not a financial advisor. I'm not telling you to go buy Tesla and sell in the money covered calls, but there are ways I'm going to show later on this channel, so make sure you subscribe. There are ways where I'm going to show you, you can buy this, and if it starts approaching this price, well, you can roll this price down lower and roll it lower again, and then when price starts coming back, you can roll it up and continue, so you never get called out. You just keep bringing in the premium, right? There's techniques to do that, but this is just a basic one right here. So just practice this, get familiar with it, and I'll have more advanced trading strategies for you in the future. So make sure you get notified of those, and then you'll just develop your skills and enhance your portfolio more and more. And before you know it, you're going to be bringing in steady money every single week, every single month. Your account's going to swell like you never thought it could, and it's going to happen, all right?